Bitcoin is like tacos. Okay, you can't have just one, Natalie. Okay, once you go dig yourself into the taco chip bowl, you're gonna have more than one. But so Michael says to me, "Well, what are your assets?" Well, I'm 55%. Well, why are you telling people to have 2%? If you're 55%, why are you telling people? Moreover, let me say this to you: if you tell somebody to own 2% of Bitcoin, that means they have to come up with 50 other ideas as good as Bitcoin, right? So let me ask you, Anthony, do you have 50 other ideas in your mind as good as Bitcoin? No, I don't. Well, then what the hell are we putting 2% at the end of this book?
For decades, central banks have quietly undermined the value of fiat currencies, eroding purchasing power and destabilizing global economies. Inflation, reckless monetary policies, and currency manipulation have fueled public frustration, driving the search for an alternative financial system, one immune to the control of central authorities. In a captivating interview, Natalie Brunell speaks with American entrepreneur Anthony Scaramucci, who explains why Bitcoin could be that solution. Scaramucci highlights how Bitcoin's decentralized nature positions it as a scarce, hard asset, beyond the influence of any government or institution. Operating on a transparent and unchangeable blockchain, Bitcoin offers a secure refuge where value can be stored, protected from inflation and political interference. As Bitcoin's popularity surges, it's becoming an attractive option for both retail investors and institutions seeking stability amidst fiat currency instability. With its growing influence, Bitcoin is emerging as a powerful tool for preserving wealth and achieving financial freedom in an age dominated by centralized control. Are we approaching a breakthrough for Bitcoin?
Stop, you don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I don't want to poo-poo that. I want to legitimize aspects of that. I do understand that Bitcoin is for the people and that Bitcoin is a libertarian concept. And Bitcoin is actually, it's sort of, have you ever heard of the group Moms Against Drunk Driving? Okay, so Bitcoiners, it should be bad. Bitcoiners against the drunk driving of central bankers. Okay, so I sort of feel like the central banking community has been drunk driving with our fiat currency, and they've wrecked it. You took $35 an ounce in 1971. It's $2,600 an ounce today. Our purchasing power, it's crazy, but I mean, these numbers are accurate. $2 of 1971 dollars are worth $100 today. Okay. In terms of, purchasing power. And so we've destroyed the money and they're drunk drivers. So when you look at Bitcoin, you see this libertarian concept, power to the people, can't trust centralization, but what we could trust is a decentralized hard asset that nobody can manipulate. And so you want it to be that. So when you say BlackRock and they're going to centralize it, or Fidelity and they're going to buy it and put it in an ETF, some of, frankly, the legendary Michael Saylor, who should be known as Michael the Great One, okay, who's done so much for the industry, some people have accused him of that. They say, oh, well, he owns as much as BlackRock owns at this point, and there'll be great centralization. But I respect the view. I don't want to poo-poo the view, but I would say step back, look at it from several 100,000 feet, look at it from a satellite picture. The Saylors and the Fidelities and the BlackRocks of the world, if they own $50 billion of Bitcoin, and Bitcoin is an asset class, Natalie, if you accept what I believe, that Bitcoin is an asset class, well, then Bitcoin should be a 15, 16, 20 trillion dollar asset class. Gold is a 17 trillion dollar asset class today. So therefore, they're not going to eat up the asset class. They'll be a component of it. There's large stores of gold by central banks. There's large stores of gold, frankly, from institutions. There's a gold ETF, GLD, that you can store gold. Okay, but it hasn't really overly impacted the marketplace for gold. And I think that the same thing is true for Bitcoin. It's just that we're here at this very early stage, only 5% adoption. So we're sitting around thinking, okay, this could cannibalize us, but I wouldn't overly worry about it. I think it's legitimate to look at, but I think you have to look at where the potential size and scope is of the market, and then you can see that that argument's not going to hold up. The state of Wisconsin bought $150 million worth of Bitcoin a few months back, maybe it was 4 or 5 months ago. And the thinking behind that is, hey, there's going to be a portfolio asset allocation mix that's going to include Bitcoin someday. Someone's going to say, Natalie, you're a fund manager? Yes, I am. Okay. How do we judge you? Well, we're going to judge you by stocks, bonds, alternative investments, hedge funds, gold, and there'll be a small sliver for Bitcoin. And so the state of Wisconsin is saying, if I'm not long Bitcoin, I'm short Bitcoin. That's coming. Why don't I start buying it now before the wave comes of all the people that feel that it's important or imperative that they need to own it?
Anthony Scaramucci envisions Bitcoin growing into a $15 to $20 trillion asset class, praising Wisconsin's early adoption as a visionary move ahead of broader institutional acceptance. He also highlights the increasing institutional recognition of Bitcoin, pointing to BlackRock's endorsement of it as an essential asset for portfolio diversification. Scaramucci argues that the current phase of institutional adoption is just the beginning and will soon accelerate, driving Bitcoin's value higher as its supply becomes more scarce. Additionally, he advocates for wider Bitcoin ownership, particularly among middle and lower-income individuals. Even small ETF-based investments, he suggests, can protect against fiat currency devaluation while offering a path to wealth accumulation. Let's return to the interview for more insights from Scaramucci's discussion.
BlackRock put out an exceptional piece. If I can find it, I'll send it to you. But it was a chart, PowerPoint presentation on why people should own Bitcoin, why Bitcoin represents a great diversifier in an overall tactical asset allocation strategy. And that story is getting out there. And what I would tell you is that Wall Street is this wonderful selling machine. Wall Street, I'm 35 years on Wall Street. What is Wall Street good at? Selling. What is Wall Street good at? Pushing their ideas, getting a retail investor and an institutional investor to consider what they're offering. And we just got that process started. There was a little bit of a curing process after the ETFs were launched. Now they're out there with these PowerPoint presentations delivering. And you'll see, here's the thing. There's a great line from Yogi Berra. Okay, your dad would probably remember Yogi Berra. He was a Hall of Fame catcher for the Yankees.
Didn't he say a nickel ain't worth a dime anymore?
Yeah, nickel ain't worth a dime anymore. It's not over till it's over. It's some great lines. But he was a catcher. They put him out in left field as he got older. And he was dropping one fly ball after the next. And when he came in to talk to the press, he said, it gets late early out there. So which basically meant implied there were like shadows out there because the sun was setting, It was a really funny line, but I think that's a great line about Bitcoin. It's going to get late early. Okay. And so what do I mean by that? Meaning you and I are going to wake up one day, Bitcoin's at 100,000. We're like, okay, what just happened? And there'll be 7 or 8 institutions that have said, you know what? I'm capitulating. I've got to own this. As a result of which there's not a lot of supply. The supply is restricted. And the next thing you know, the price is up a lot. And it will have gotten late in terms of adoption early. It's going to get late early in Bitcoin, like Yogi said about left field. What I would say to you is that more education, more things like you're doing with your podcast and your public speaking and the book that you're writing and raising awareness. I'm certainly trying to do my part. I would like to see a deeper well of ownership in Bitcoin. And I would say this to you, and perhaps you would agree with me or perhaps you wouldn't, even if those people had to buy it through the ETF. So even if there were people that are in the middle class, lower middle class, they were buying $100 of Bitcoin a month or $100 a quarter, and they were the only way they could really access it is through the ETF. And even though it has some detriment in terms of centralization, who cares? At least people now are building something, I was giving flack about Bitcoin being 63,000 3 years later, but your dollar is 68 cents. Right. So you lost 32% of your purchasing power. You see what I mean?
Yeah.
So Bitcoin didn't lose any of that. still right there. You see what I mean? And so what I would say to you is, again, I don't know the answer. That's why I'm being so cautious, but I would say this to you. I would say we have to push this. This is something that Wall Street will help with, but we have to push the idea that it's a diversifier and it's a hard asset. And if you are an hourly worker like my dad was, you're losing to the man.
Right.
Because the man owns assets and you don't. And Bitcoin is a way for you to get a piece of the action.
Right.
And again, it's broken up into 100 million Satoshis per coin. Just start buying some Satoshis.
On October 14th, 2024, Bitcoin reached a significant milestone as its price surged to $66,000, raising questions about whether this marks the start of a larger rally. This upward momentum, driven by whale buying pressure and increased demand from both retail and institutional investors, fueled optimism for a strong market finish in October. The BTC-USD price hit two-week highs, supported by trading activity in Asia and positive sentiment in U.S. market. Analysts observed that Bitcoin reclaimed key support levels, such as the 200-day moving average, signaling the potential for a bullish trend. Prominent market watchers like Skew emphasized the importance of the $65,000 mark, describing it as a critical point for sustained growth. Additionally, rising demand from Bitcoin whales, seen in Binance order books, strengthened confidence in a positive market outlook. QCP Capital noted similarities between Bitcoin's current price movement and its historical cycles in 2016 and 2020, where significant rallies occurred before U.S. elections. The firm expressed optimism that Bitcoin could see another substantial price increase by the end of the year. Despite recent volatility, many remain confident in Bitcoin's long-term potential, likening it to gold and other valuable commodities as institutional adoption continues to grow. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.